Well, good morning. Thanks for joining us. I'm Marlon Bowling, your tour guide to the ag commodity trade. Happy Monday to you. I know that's kind of a conundrum out there, but anyway, glad to have you joining us today as we kick off a new trading week. It's a full trading week. Haven't had too many of them here lately. And I am joined by Brian Hoops, president of Midwest Market Solutions. He's in Springfield, Missouri. Interesting market overnight here, Brian. We had a lot of pressure there, but before we take a look at the prices, I want to reveal some new information that just came out here a moment ago, and it was from USDA. It was related to their flash export sales, and so we had one overnight, or in this case, over the weekend that came across. And here is a look at it. It's another sale of soybeans. This time it's 192,000 tons of soybeans that were sold to the proverbial unknown destinations. So once again, you can chalk it up. That's kind of the same category as what we had late last week. Now, my question to you, Brian, isn't China starting their Lunar New Year's celebration today or this week? Is this kind of a last gasp of purchases before they shut down for a couple of weeks?
Yeah, good morning, Marlon. You're exactly right. They're going on holiday, so we won't be hearing a lot from China. We may be hearing from this unknown destination, which almost inevitably ends up being China. So there may be some purchases this week, but it probably won't be Chinese origin, but of course can be changed. And the other thing that can happen with these purchases is they always can be canceled. We saw big rains over the weekend in Argentina. That'll help stabilize that crop, which is really low ratings as far as corn and soybeans go, and really can't get a whole lot worse. But there's more rains on tap for this week for Argentina, southern Brazil. It's going to help this crop out, and we've seen the markets react negatively as far as pricing goes over Sunday night with a gap lower in meal and in soybeans. And we talked last week about the fundamentals being bearish for soybeans, but the technicals were still higher, and that's when we were making new highs. Now those technicals starting to weaken, you're going to see a kind of alignment here, I think, of the fundamentals and the technicals, which are going to be bearish for some time. And one of the things that really comes into play here is funds were adding to long positions last week in soybeans and meal and corn, and those longs are going to be very vulnerable to long liquidation. It's not wheat that really could see that long liquidation. Funds are already short in wheat. It's the meal, it's the soybeans, and the corn that really could take a hit over the next several weeks if the funds decide to start abandoning the long side.
Well, let's take a look at those prices overnight then. On the Globex trade on the corn market, these are the quotes provided by bar chart here. You had March corn sinking by 6 1/4 cents this morning. We were at 6.70 per bushel, within a penny of our low of the overnight trade. Your new crop December contract down 5 1/2 cents at 5.90 1/4. So we continue to slide a little further away from that $6 benchmark. Now let's move to the soybean trade here, and the nearby March contract. Wow, down 16 1/4 overnight, all the way down to 14.90 1/4. We don't even have a 15 handle left on the board anymore. They're all gone. We had the May down 16 cents this morning. Let's jump out to November new crop soybeans and see what they were doing. This morning at last check, we had them trading 10 1/2 lower at 13.41 1/2. Now let's switch over to the wheat market. We'll start in Chicago. And here you had the March contract losing 9 3/4 cents, and we were at 7.31 3/4. There again, just 3/4 of a cent from our low of the overnight trade. We had July new crop down 8 3/4 cents. In Kansas City wheat, you had the March down 13 1/2. 8.34 1/2 was the last trade there. And July down 12 3/4 at 8.22 3/4. Meanwhile, in the Minneapolis spring wheat trade, you had the March contract 10 1/2 lower. We were at 9.02 1/4. July was down 9. And to wrap things up, we'll take a peek at that cotton market. March was down 53 points at 86.17. December down 23. We'll come back and talk more with Brian Hoops. We'll take a look at the livestock trade and what may happen there this week after this. All right, we're back talking with Brian Hoops of Midwest Market Solutions. Brian, when we look at the livestock trade now, of course, on Friday, after we closed up the trade, we had a cattle and feed report that came out from USDA. And from what I could gather, all the numbers were just about identical as to what the trade had expected to see. So now that we have that out of the way and there was no surprise there, what does that mean for the trade this week?
Yeah, you're right, Marlon. It wasn't really much of a surprise compared to the estimates, but it was a bullish number when you compare it to year-ago levels. You could see the on-feed numbers well below last year. In fact, that's the smallest January 1st on-feed since 2019. The placements numbers even more friendly from the standpoint compared to a year-ago level. That's the lowest place in December since 2018. So you're looking at 5-year lows for on-feed numbers and placements. That tends to be bullish, and really the tightest supplies is probably not here yet. They're probably coming in the second quarter. So again, the caveat is the economy and consumer demand, because we know we're going to have tight supplies. These prices probably want to try and move higher if the consumer is willing to pay for that. That's the real caveat. Last week we had a little bit slower slaughter pace, 646,000 head than what is desired. That's still a decent number, but we want 650 to 660. That's when the packers seem to be a little more aggressive in buying the cattle, and that'll help the cash trade. But in turn, a slower slaughter pace does help out our product values, and we saw a glimpse of that on Friday, and probably we'll see that again today with higher product numbers. Should give us some support for the cash market. So really, I think what gets down to this week is going to be that slaughter pace, going to be the cash direction. And we could be higher, I think, by Friday in both of those and give us some strength in the futures. Now, feeder cattle probably going to react to the lower corn with some higher prices, and probably should spill over into the live cattle as well.
When we wrapped up Friday, we had the April live cattle 80 higher at 159.92 on the feeder cattle side. Here, we finished up the week with the March up 87 at 180.97. And on the lean hogs, we went home for the weekend with the April contract $1.32 higher at 85.72. Real quickly, Brian, they are talking about a winter storm taking a southern track this week, maybe even going up through your area. Would that have an impact on cattle prices, do you think?
In the old days, a big snowstorm would be bullish for cattle. We saw snow last week across the plains and really didn't impact the cattle much, but it does slow down their feed conversions, adds some tough conditions for the cattle and for the producers. So it should be positive, especially in the long run. Maybe we don't see it initially in the futures, but yeah, it should be initially. It should be positive for the cattle market.
All right. Well, Brian, thank you for the time and for talking with us here today. Always look forward to our chats. And we'll talk with you again here real soon. Brian Hoops of Midwest Market Solutions. So, Tammy, the table is set. We'll get everything trading at the bottom of the hour.